Hello everyone, I'm CA Neeraj B. Welcome to my YouTube channel Accounting Buddy. Today we are starting a new chapter, the accounting equation. In today's video, we are diving into one of the foundational concepts of accounting, the accounting equation. This simple yet powerful formula lies at the heart of every financial transaction, helping businesses keep their finances balanced and organized. We will cover 9 topics on various aspects of accounting equation with illustrations. So sit back, relax and watch the full video and be an expert on the subject. The accounting equation is a fundamental principle in accounting that expresses the relationship between assets, liabilities and equity of a company. The principle of accounting equation is based on dual aspect of accounting, which means that every business transaction will always have two aspects, debit and credit. It also means that for all business transactions, for every debit there is a credit of equal amount, and for every credit there is a debit of equal amount. It also means that the total amount which business owes to the outsiders plus the owners will always be equal to the assets owned by the business. We can express this understanding into a mathematical equation displayed on your screens. Assets are always equal to liabilities plus owner's equity, or this equation can also be expressed as owner's equity is equal to assets minus liabilities. This relationship is known as accounting equation. Let us understand accounting equation with a very simple common life scenario. Mr. X bought a home for $500,000. To pay for the home, he took a home loan of $300,000 from bank, and the balance amount of $200,000 he contributed from his savings. Now, if we apply the accounting equation to the current situation of Mr. X, it will look like as displayed on your screens. Asset, that is the house, is valued at $500,000. Bank loan of $300,000 is the liability of Mr. X, and funds of $200,000 put in by Mr. X is his equity. Therefore, in this situation, the value of the house, that is $500,000, is equal to the sum total of bank loan $300,000 and Mr. X contribution of $200,000. Always remember, left hand side and right hand side of the accounting equation will always be equal without any exception. 1 year later, Mr. X repaid part of the bank loan amounting to the extent of $60,000. Post the payment of $60,000 bank loan, the accounting equation of Mr. X will look like as displayed on your screens. Asset value will remain same, that is $500,000. However, the liability will now be $240,000 because out of the original loan of $300,000, he has paid $60,000, and his equity contribution will increase from earlier $200,000 to $260,000. Remember, after every transaction, the value of the asset, liability or equity will change, but the right hand side will always be equal to the left hand side of the accounting equation. An accounting equation always hold true at all times without any exception. Total assets of the business will always be equal to the sum total of liabilities and owner's equity. With each business transaction, the value of assets, liabilities or equity will change. However, right hand side will always be equal to the left hand side of the accounting equation. That means the proportion of liabilities and owner's equity might change, but their sum total will always be equal to the total assets of the business. Always remember this fact. Now let us quickly recap the meaning of the terms assets, liabilities and equity. First, assets. Assets are what business owns and control, like cash, inventory, building, etc. These are properties and resources that provides present and future economic benefits to the business. Now liabilities. Liabilities are what business owes to the outsiders. Loans, accounts payable are some of the examples of liabilities. They represents the obligations that the business needs to settle in the future. Now equity. Equity means the owner's claim on the assets after all the business liabilities are settled. It includes the capital invested by the owner plus the retained earnings from the profits of the business. Now, if we sum up, assets of the business are always equal to liabilities of the business plus the owner's equity. Assets are the property owned by the business. Assets are the resources a business uses to generate revenue. Liability are the outstanding debts of a business, while equity is the ownership interest in the business after all the liabilities have been paid. Both liabilities and owner's equity are the means of acquiring and owning the assets of the business. By nature, assets always have a debit balance. Therefore, any increase in the value of assets will result into the debit of asset accounts, and any credit in the asset account means reduction in the value of assets. Now remember, liabilities and owner's equity by nature always have a credit balance. That is, an increase in liabilities or equity will result into the credit of liabilities or equity accounts, as the case may be. Any reduction in the liability or equity balance will result into the debit of these accounts. Let us further understand accounting equation. That is, the assets of the business are always equal to the liabilities and the equity of the business. Always remember the metrics displayed on your screens. This is very important table. Asset accounts are debited when the assets increases, and the asset accounts are credited when the assets reduces. Liability and equity accounts will be credited when the balance in these accounts increases, and the liability and equity accounts are debited when the balance in these accounts decreases. Now let us further elaborate owner's equity. Owner's equity includes the amount of capital contributed by the owners plus the amount of retained earnings balance appearing in the balance sheet of the business. Let us now understand the term retained earnings. Retained earnings is the balance of the net income, that is the total revenue minus expenses, which is undistributed to the owners as dividend. This table is also very important for us to remember. Revenue account by nature will have a credit balance. Therefore, when the revenue increases, the revenue accounts are credited and the revenue accounts are debited only when they are reduced for any reason. Similarly, expense accounts are by nature always have a debit balance. Therefore, when an expense increases, the expense accounts are debited, while whenever the expense accounts are reduced for any reason, they are credited. This is a very important slide. Always remember the concepts explained in this slide. The accounting equation serves as the foundation for the balance sheet, ensuring that it accurately represents the financial status of the business. The balance sheet is a formal presentation of the accounting equation. The three basic components of the balance sheet are assets, liabilities, and owner's equity. A specimen of balance sheet is displayed on your screens. As you can see, it is divided into three major sections: assets, second is the liabilities of the business, and third one is the equity of the business. At this stage, just remember the relationship between the accounting equation and the balance sheet of the business. We are going to discuss the balance sheet and its various components and their relationship in subsequent chapters in detail. In this slide, we will learn the technique of preparing an accounting equation from a business transaction. First of all, analyze the business transaction to find out the effect of the transaction on the movement in the value of assets, liabilities, or capital of the business. Figure out whether the transaction effect will result into increase or decrease in the value of assets, liabilities, or capital. Memorize this table. This is the basis on which the accounting equation will be prepared. Final step is to record the effect on the relevant side of the accounting equation. Let us understand the process of preparing accounting equation with some business transactions. PK started his business with a cash amounting to INR 90,000. Now if we analyze this transaction, two accounts which will be affected are cash and capital. Second step is to figure out whether as a result of this transaction, the value of these accounts will increase or decrease. In our example, as a result of this transaction, cash, which is a current asset, will increase, and second, the capital will also increase. I hope you have understood this two-step approach. Now let us take second business transaction. PK purchased goods worth INR 8,000 from BBC company on credit. In this business transaction, the two accounts which will be affected are stock and the second account is liability. Second account in this case is liability because the goods are purchased on credit. As a result of this credit purchase of goods, stock, which is a current asset, will increase and the BBC company will become a creditor and therefore the liability will also increase. The third transaction which we will consider is that the goods costing INR 3,000 are sold for a cash of INR 7,500. If we analyze this transaction, cash and revenue accounts are affected and the cash, which is an asset, will increase and the revenue is earned, therefore it will also increase. In the same transaction, cost of goods sold, that is the COGS, and the stock accounts are also getting affected. Expense will increase being the cost of goods sold and the stock being the asset will get reduced. Now let us consider salary of INR 2,500 paid in cash as our fourth transaction. If we analyze this transaction, the two accounts which are getting affected are salary, which is an expense account, and the cash, which is an asset account. With this transaction, expenses will increase, and since the salary is paid in cash, cash is an asset which will get reduced. If required, please rewind the video to understand this example again. Accounting equation concepts understanding will make a solid foundation for mastering accounting. Just to repeat and conclude what we have learned in the previous slide, always remember to find out the impact of a business transaction on the accounting equation, identify the bucket of the accounting equation it is affecting. Following the two-step approach through which we have analyzed and identified through four business transaction examples in the previous slides. That is, whether it is affecting the assets or liabilities or equity. And by now, we very well know what are assets. They include both current assets like the cash, bank receivables, prepaid expenses, etc., and also non-current assets or fixed assets like plant and machinery, building, furniture, etc., owned by the business. And the liabilities include creditors, outstanding expenses, bank loans, etc. Owner's funds include capital contribution and profit earned or loss incurred by the business. Also remember, assets are always have a debit balance. If the value of asset is increasing, debit them, and if the value of the asset is decreasing, then credit them. If left hand side of the accounting equation is debit and is equal to its right hand side, that also means that the liabilities and the capital will always have a credit balance. If the value of the liabilities or the capital increases, then credit them, while if the value is decreasing, then debit them. Always remember this equation and its fundamentals. Let us practice and process accounting equation with couple of business transactions. Transaction number T1 is on your screens. Golu started his business with cash amounting to 300,000. If you analyze this transaction, cash, which is an asset of the business, will increase and an amount invested by Golu will increase his capital in the business. Therefore, 300,000 increase in cash will be shown on the left hand side and 300,000 an increase in capital on the right hand side of the accounting equation. Please note, cash being an asset is increasing, therefore it will be debited, and the capital is also increasing, it will be credited. T2 transaction on your screens is Golu purchased goods worth 50,000 from Polu for cash. With this transaction, the stock, which is an asset, will increase and the cash, which is again an asset, will be reduced. And in terms of accounting equation, this transaction will be reflected as appearing on your screens. Stock will increase and the cash will be reduced. Post T2 transaction, the new accounting equation T3 will be 250,000 cash plus 50,000 stock equal to 300,000 of capital. Transaction T4 on your screens is goods costing 20,000 sold to Molu for 30,000. If we analyze this transaction, Molu will increase the debtors as the goods are sold on credit. Therefore, receivables, which is an asset, will increase by 30,000. Stock will be reduced by 20,000 and the capital will increase by 10,000, being the profit earned on the transaction. Post transaction T4, the new accounting equation will have cash 250,000, stock 30,000, receivables 30,000, totaling to 310,000 on left hand side and an equal amount of 310,000 as capital on the right hand side of the accounting equation. Now let us analyze T6 transaction related to the purchase of furniture worth 7,500 on cash. The effect of this transaction will be number 1 on assets as the furniture is purchased and number 2 again on assets as the transaction is settled with cash. Therefore, furniture, which is an asset, will increase by 7,500 and cash, which is again an asset, will be reduced by 7,500. Now post transaction T6, the new accounting equation will have cash 242,500, stock 30,000, receivables 30,000, furniture 7,500, totaling to the total assets of 310,000 on the left hand side, and we will have the capital of 310,000 on the right hand side of the accounting equation. Please note that the value of accounting equation will change with every business transaction. However, the left hand side will always remain equal to the right hand side of the accounting equation. Let us now answer few questions related to the topics which we have discussed just now. Question number 1. What is the accounting equation? The answer is assets are always equal to liabilities plus equity. Question number 2. What do assets represent in the accounting equation? Answer is assets represent resources owned by the business. Question number 3. What are liabilities? Answer is liabilities are obligations or debts owed to outsiders. Question number 4. What is equity? The answer is equity represents the owner's interest in the business after liabilities are subtracted from the assets. Question number 5. In accounting equation, equity is equal to, the answer is equity is equal to assets minus liabilities. Question number 6. How double entry accounting supports accounting equation? The answer is double entry accounting ensures that every transaction affects at least two accounts, keeping the accounting equation balanced. Question number 7 on your screens is, what happens when a business takes out a loan? The answer is liabilities increase and the assets also increase, keeping the equation balanced. Question number 8. If a company earns revenue, how does it affect the accounting equation? The assets increases and the equity also increases. Question number 9. What effects does pay off a liability have on the accounting equation? The answer is assets decrease and the liabilities also decrease, keeping the equation balanced. Question number 10. What role does the accounting equation play in financial statements? The answer is accounting equation translates into balance sheet, which shows the financial position of a business. Question number 11. How do dividend impact the accounting equation? The answer is dividend decreases assets and also decreases the equity. Question number 12. How does depreciation affect the accounting equation? The answer is depreciation decreases assets and it also decreases the equity of the business. Our next video on 14th December 24 will cover various business transactions through 6 more illustrations so that we do not leave any stone unturned in our effort to master the concept of accounting equation. If you like the content of our channel and our way of explaining the topics, please like, comment and subscribe to our channel Accounting Buddy. Please do not forget to press the bell icon so that you do not miss our latest post. Thank you and goodbye.